Hello, traders. It's 8:01 a.m. Chicago time on Monday, the 27th of April, 2020. Thanks for joining me for episode number 1742. Derivatives trading is not suitable for all investors. Past performance not necessarily indicative of future results. This morning, risk on sentiment, the DAX leading the pack. The DAX had a release from um, Deutsche Bank, which surprised the markets for Q1, showing a gain versus a loss. In addition to that, the rest of the market was buoyed up by action by the Bank of Japan. The Bank of Japan expands stimulus as pandemic pain worsens. It pledged to buy an unlimited amount of bonds to keep borrowing costs low as the government tries to spend its way out of the growing economic pain from the coronavirus pandemic. And then in addition to that, we're expecting to hear today uh, from U.S. banks regarding the $310 billion in fresh small business aid from the government. A lot of small businesses who have payroll and were seeking protection and not laying people off ended up not getting any of the last stimulus. And so there's another one that's coming up. Again, government stimulating the economy. And so that's where we stand. There's also talk of various places that would be relieving their citizens of the lockdown. There's likely to be a gradual release of lockdown rules. Some services would be able to relaunch their businesses, and the market's looking forward to that. So we have a gap up in U.S. equities. The DAX leading the pack up 2.46%, 254 points. The Euro stocks up 58 points or 2%. The Russell's the leader in the U.S., up 23.6 points, about 2%. The Nasdaq's up 109 points, 1.24, and the S&P's up 29 and a quarter points after a strong finish on Friday, up 1%. The laggard today is crude. June crude taking a beating this morning, down $4.19 or 25%. 25% after balancing out on Friday. Crude ended up moving into a trend down day this morning, breaking away from that 1790-18 area, and that's where that stands. So it's definitely feeling some pain. By the way, many FCMs, futures clearing firms, have restricted the ability to trade crude. Many have actually put crude oil positions, any open positions for customers, on liquidate only. And therefore prohibiting customers who don't have an open position from opening one. And I suspect that many will get aggressive about closing those open crude positions ahead of June's expiration here. They don't want to see this negative pricing again. That's a very scary prospect for clearing firms. Anyway, so that's where we are this morning. So risk on sentiment, we have a gap up, gap rules this morning, and that's where that stands. In terms of releases, we don't have much today, although this week is quite busy. This week we're going to have Wednesday releases of GDP for Q1, which is expected to be negative 4.6, negative 4.6. The prior is plus 2.1, which was pretty consistent for the U.S. in terms of GDP growth. And then, more importantly, we have the Fed interest rate decision at 2 Eastern, expecting the Fed to maintain the current rate, the Fed funds rate, which is 25 basis points, 25.25%. For today, there's really not much on the calendar. Same for tomorrow. We have some minor numbers, wholesale inventories, S&P Schiller home pricing, and consumer confidence. And then after the close tomorrow, we get API crude oil stocks. Again, pay attention to Wednesday. Thursday is chock full of releases, both from Japan, Europe, and the U.S. And then Friday, we have ISM, but that's really it. And that's how the week looks currently. So that's where we stand this morning. In terms of review, on Friday, I was off on both counts. I did expect the market to sit sideways, potentially test 28, 20, 22, and then drop below the 2800 to 2795 and hold steady. I expected Friday to be a lazy day after the selling on Thursday and the fact that we gapped up. The secondary is a continuation with Thursday selling. The third scenario is an open test drive up, which would likely push to around 2850. None of those really worked out. What it did do on Friday is it canceled out what it did on Thursday. Let's kill these zigzags. It canceled out what it did on Thursday. As you can see here, Thursday, it sold off into the close. It sold off into the close after breaking higher on a neutral extreme down day. And then on Friday, let me zoom out. On Friday, we did have the responsive selling, so that's scenario two-ish, and that traded pretty well. We had a couple of decent opportunities on the short side. We extended the range down, higher low on the retest, could not close the gap at 27.8150, the internal gap, which was really surprising. And then missed it by 3 ticks, and then it started to wind up, pull back, and then it went neutral, and it finished neutral extreme up. And what Friday did is essentially work the opposite, including the profile shape to Thursday. It neutralized Thursday's drop. Remember, Thursday had neutral extreme down. It was expected to continue to trickle down overnight. And it did for a little bit, then it gapped up, and I was looking for a test of the overnight high before it would sell back and go below the low of Thursday and then consolidate and come back into the open. That's what I was looking for on scenario two. But instead here, it did push the low, then it went neutral, and it closed with as a neutral extreme up with the VPOC in the upper quartile of the range, and on a weak high. And this close on Friday reveals that the market is not likely to be done to the upside. It could not take out Thursday's high at 36.75. It stopped at 35, and the expectation is on the reopen, it would likely push higher. It did. It ultimately pushed higher after pushing down, and then it did leave us with this 2806, 2805 area, which has been a stock zone level for some time. It left us with this low volume node to account for going forward. The overnight session opens up, pushes the high immediately. Let's zoom in. Opens up, pushes the high immediately, and then pulls back to put in a low during the Asian session, and then sideways until we get to the European Open. The European Open is right here, and from there we peak out and then just go sideways. The profile overnight is P-shaped. This looks like short covering type of action. It's a grind up, and there's a lot of volume that has occurred near the top, but the overall volume for the session is relatively low when compared to prior overnight sessions. There's really not much here in terms of aggression. this tended to really push up, and you could see that we have a pretty strong delta in the overnight session. Anything above 10,000 in the or below 10,000 in the overnight session is pretty aggressive. So they've been lifting. Looks like participants have been lifting pretty aggressively, and we have a weak high. I expect this to continue to trickle higher, potentially after it pulls back and rebalances. The overnight inventory is mostly long. It spent some time below the close on Friday, but much of the volume, as you can see here on this profile, much of the volume has occurred above the closing price. And so that's what the overnight session is telling us. It's telling us that the buyer's pretty active. Given that it's the beginning of the week, I like to look at the profile and see where we are in the overall picture. Again, the the all-time high is 3382.50. The swing low on COVID-19 is 2179.50. That's it's 120 points or not 1200 points, 1200 point drop, and we got stuck here at the 50%. We just bobbed around this 50%, a couple of gaps, a gap up, gap down. And now we're pushing through, heading towards the 60%, the 62% or 61.8% pullback. Also gives us this big point of control that comes from way back. So if we look at the overall profile, let's extend this out. You could see that the 62% is right on top of that 2918 point of control, and this comes from way back. This is from the end of 2018. This run up from the end of 2018 and all the way till now. We have a lot of volume right here. We've spent a lot of time and traded a whole lot where we are, where we're headed, and this makes this area a pretty big magnet right now. But I do expect it to chop around in that 2923, 2918 area. That's the big picture. I expect some sort of, once it gets up here, I expect that it's some sort of a pullback and drop once it gets into that area. But who knows when that'll happen. In terms of the order flow, the order flow has been pretty muted overnight. I mean, buying's been pretty good, but I'm not seeing really a tremendous amount of clues here in the overnight order flow. We have some size at the key strike prices, 2870, 2880, and below there's really not much all the way down to 2831 or so. We're in a gap zone. We're in a huge gap zone still. The order flow is not really all that clean in the overnight session. There's a lot of positioning and pushing back and forth. And with the volume being as low as it is, it's pretty hard to read. This is expected to be a bit of a grind today. Not really, I said this, when was it, Thursday or something last week. I said it's likely to be a bit of a grind, and then the market kind of ripped. But it's anyone's guess. But given the way the market is traded overnight, the way it's set up in the order flow here on CT Bookmap, I'm seeing the high potential that it's likely to just grind around and be choppy this morning. So be cautious as to how you're positioning yourself. The VIX, the VIX down here. VIX down here dropped pretty hard on Friday on that rally, making this move quite strong. I mean, this rally on Friday was quite big, with a very strong shift to the high. I believe that this creates a base up here. for moving forward. So in this 28.22 to 28.36 area, I'm looking at this area as a pretty decent defense area. In other words, I expect that a move down here is likely to establish value and or to establish a low price compared to value, and I expect some support as it comes in here. Okay, let's take a look at what's expected for today. So for today, given where we are and where we stand, switch. This morning, we're trading on top of the overnight point of control, or right here. That's the last price. That's where we are currently. I'm expecting an open auction out of range that responds and pulls back to 28.45 or so. I'm expecting it to consolidate. It may push lower. I'm expecting the gap to remain open, and then I'm looking for that high to be taken out for a push to 28.71.72. That's the high of these 2 days. And then we move into, beyond that, we move into the area to close the gap. And I'm looking for this to start drifting higher. Again, we are moving towards that 29, 18, 20 area most likely. So I'm expecting it to challenge this 72 and push into the 28, 80, 85 or so before we rest and tomorrow come back and challenge 2900 on our way up. The secondary, given what it's done, the secondary is an open that pushes higher, consolidates, pokes through the high of those two of last week's or the week before, the Thursday, Friday, the 17th and 16th, and then it's confronted with some selling, and then it pulls back into the middle and then consolidates and finishes where it is now. That's scenario two. That is a balanced day with a gap remaining, expecting the gap to remain below us open. Because we're out of balance here, given the gap, the third is a drift up that takes out the overnight high, and then we have a drive back down into the 28, 35, 36, and a move into 22, consolidating before it holds and pops back up and sets us up again for a run higher tomorrow. Again, if you look at what has happened here, even though we sold off on this day, we have a low that was put in after a gap down, higher low, and higher low. And what we have also is a point of control shifting to a higher point of control. Therefore, the market's accepting value and trading more aggressively at higher prices. A shift up of the point of control higher, and then a shift up of the point of control even higher. So I'm expecting this to continue into today. So a point of control expected around 28.45, 28.50 or so today. We'll see how that plays out tomorrow when we do our review, but it's important to see that this is going higher as we move up. The market is accepting values higher and higher and higher and higher. Okay. That's all I have for you. Good luck today, and I'll catch you tomorrow. For those of you who haven't heard about EdgeClear, I do ask for your support. It's a brokerage that I and a team of brokers, a great team of brokers, launched on April 2nd. We've been in operation now for 3.5 weeks. And if you're unhappy with your broker, or if you're looking to join our team, please head over to edgeClear.com. We are running a very, very aggressive promo to get as many people controlling the risk better by going to the micros as possible with a 98-cent all-in round trip rate on the micro indices. You're welcome to join edgeclear.com. Take care.